Oil prices climbed sharply after fresh fighting in the Gulf reignited concerns over global energy supplies. Brent crude rose above $78 a barrel, while U.S. crude crossed $73. Now, the renewed escalation has put the spotlight back on the Strait of Hormuz, a critical shipping route for global oil exports. Although U.S. President Donald Trump said the strait remains open to commercial traffic, Iran has claimed it closed the waterway after accusing a vessel of taking an unauthorized route. A ship tracking data showed just 6 vessels transited the strait on Sunday, the lowest daily count in 5 weeks. The latest escalation has raised doubts over the future of the interim US-Iran agreement signed last month, which aimed to restore shipping through the Strait of Hormuz and pave the way for further negotiations. According to the International Energy Agency, global oil supply increased by 4.1 million barrels per day in the month of June following the agreement. But production still remains 9.4 million barrels per day below pre-war levels. Analysts say the recent oil prices rise reflects growing geopolitical risks, although markets are still treating the latest flare-up as an escalation within an already fragile ceasefire rather than a complete breakdown. Any further disruption to shipping through Hormuz could tighten global supplies and add further pressure to energy markets. The rise in crude prices rippled across financial markets, reviving concerns over inflation and interest rates. Asian equities fell, with Japan's Nikkei dropping 1.6%, and South Korea's market losing more than 5% amid broader weakness in technology stocks. US and European stocks futures also moved lower while the US dollar strengthened and treasury yields climbed. Gold slipped as rising bond yields reduced demand for non-yielding assets. Investors are now watching upcoming US inflation data, corporate earnings and developments in the Gulf, with any further disruption to the Strait of Hormuz likely to remain the biggest driver of global oil prices and broader market sentiment.